Alright, so this video I'm gonna go over the footprint. I'm gonna show you the stages of absorption. Exhaustion's a little hard to see on the footprint, but it's not impossible. Uh, it's just hard to see. But it's easier on CVD, which will be another video. So as you should know, just real quick, these are market buyers. All right, market sellers. So adding on to the DOM video, what that means, so if there's 18 sellers market, there has to be 18 passive buyers. All right, I don't know, you can't even read that shit. And then same thing for here, 20 market sellers, there has to be 20 passive, or 20 market buyers, there has to be 20 passive sellers, right? Common knowledge on the DOM. Just think about the footprint as these two columns, right? Yeah, just think about it as these two columns. So keep that in mind, right? There has to be a passive buyer and passive seller to fill these market orders. All right, that's what they're hitting into the bid, hitting into the ask. Yeah, this was the trade I took today. I don't think you could see the absorption really well on the footprint, but you definitely could on the DOM. Yeah, it's not the best example. But let me just draw it out. Why not? So whenever you see absorption, right? So here's a level, here's a level. These are the key factors that you need to look at. All right. Absorption, what is it? All right. It's whenever a passive, absorption's always passive. It's never going to be like some fucking market order. It's passive. So there has to be a passive buyer or passive seller. So whenever we're looking for shorts, there has to be a passive seller with his block. All right. And then whenever we're looking to long, there has to be a passive buyer with his block. Now I'm drawing them on this side because this would normally be the bid column and this would normally be the ask column, all right? Fuck. And then I'll get into trap traders and stuff. I explained it in the DOM, so. All right, so obviously you want to see price hit into your order or hit into your level, whatever, or just your watching price. So as it comes down into this block and as we come up into this block, all right, you want to see aggressive market participants in that direction. All right, so as we're selling off, you want to see aggressive sellers right here, aggressive selling. All right, you want to see down here while we tap into this block, you want to see aggressive selling. All right, maybe a little bit here, you want to see aggressive selling. All right, before the delta flip. Same thing for this, aggressive buying. All right, while we're at this block. All right, so these are like the delta for the candles. All right, so think about this like what the CVD should look like, or just looking at this, you want to see like a bunch of selling delta showing us that there's a lot of market sellers. All right, aggression. As we come into here, there's going to be a passive buyer. All of these sellers, they're going to be getting filled by a passive buyer. So if you don't use something like the DOM to be able to see that passive buyer and all you have is the footprint, that's why I use both. If you use the footprint only, you need to be looking at delta. You need to. All right. because what the delta is telling us, if we get at a level and we have a spike in delta like this and we can't go lower, that means all those sellers are getting absorbed because those sellers are meeting a passive buyer, and you can't move lower. That means that passive buyer filled a large position and he potentially wants to flip the delta and move prices higher. So I look for aggressive delta into my level. Then once the passive buyer or seller fills their position, all right, I want to see the delta flip. All right, that's the whole, like, obviously it's in the name. I want to see the delta start to flip and leave my level. All right, so what that means is now the passive buyer filled all his position. Now the market buyers, not the passive, the market are starting to get aggressive, and that's what moves price. They're starting to get aggressive. Maybe we sweep the ask and we get a bunch of thin prints, whatever. Just, I want to see some response to this. All right, because if they just get filled a lot, it's not going to go anywhere. We need those market buyers to come in. All right, and same thing, obviously vice versa. Right, now I want to see response. I want to see some market sellers come in. All right, and that's essentially how it gets done. That's how absorption happens. And they fill their whole order. Over here, they fill their whole order. Fuck, this video is like 7 minutes and I just explained absorption. I mean, I guess that's all there really is to viewing the footprint. Then there's exhaustion. All right, so that's how you see absorption. You want to see aggression. All right, so that's just off of delta, right? So if you take it to the footprint, another thing you want to see is as we come in, you want to see some imbalances to the downside. So right here, you see how we had aggressive sellers. All right, so boom, checked off, right? We didn't on this candle, but I saw it on the DOM and I know it was absorption. So you see aggressive sellers there. Here we're aggressively selling in. We have imbalances being formed, which is what you want to look for. Imbalances being formed. All right, this is a pretty bad example. On the footprint, I normally just look for the imbalances in the delta. But then what you want to see is the delta to after all these passive buyers get filled, you want to see the delta to flip like I talked about. So now we're trading 224 positive delta. All right, and you can see the average was positive. I mean, we had this one big candle right here. And then over here, we can see we flipped it. All right, we had selling and then we flipped. All right. So after we see that, we know, okay, this guy just filled his position. And especially if this is at your level, like that's all the confluence you want at a level. So on the footprint, you just want to look for these imbalances right here. All right. Just to see that there's way more sellers. And then on response to that, you want to see some bullish imbalances. All right. This isn't really the best example in my opinion, but as long as you get the concept, that's all you need. Then we have trap traders. The concept of that is essentially, I talk about it in the DOM video. It's essentially selling in, right? We have 30 to 0, maybe 20 to 5. All right, so this column's the sellers. All right, 60 to 10. And then after all these market sellers that were aggressive, they were obviously getting filled by a passive buyer who filled his whole position. And now what? These market sellers, they're fucked. They bought the bottom of the candle. They bought down here. So now we're going to start to see it shift to 10 to 20, then maybe 30 to 400. Just a big lot just comes in. Maybe 100 10 to 500. All right, now the delta is starting to shift. Now we have positive delta compared to this, right? And here we had negative delta. So boom, that was just our flip. All right. So these sellers right here, 60 to 10, they're going to have to close their positions. How do they close it? Passively or just market. They market buy. So they're going to close their positions so we can anticipate about, like, what is this? 110. We can anticipate 110 buyers to come in, maybe up here, or maybe at a high, to flatten their positions. I mean, unless they hedge and you're looking at other indices, unless they try to hedge or something, which is, I mean, you're not really going to see that, especially not some fucking kid getting stuck at the bottom. So they're normally just going to assist the price in its move higher. All right, so that's why you want to look for imbalances at the lows. I mean, I can't find a good example. But, like, yeah, look over here. You see these buyers coming in. They get trapped, and then they have to close their positions. And maybe they close it here, maybe they close it here. Or, like, at this break, they just started to, like, sell all their positions, and it helped the price go lower, right? So that's the concept of trap traders. That's how you use footprint with that. Then we have footprints for entries. All right, and I'm actually gonna go to a example from yesterday. Yeah, this should be good. No, it was this one. All right, so this was a trade I was looking at. Now, another way you can use footprints are for these imbalances to look for a rejection off of. So here you can see, let me get out, let's do green. All right, we have this large imbalance. All right, and you want to enter, right? You missed the level, you want to enter. So you just look for some imbalances. Quant doesn't always highlight them, but like here we have 7 to 0. All right, so this would be the start of my imbalance, 7 to 0. And then I would end it off maybe down here, or 10 to 4. I'd end it off. All right, let's see if there's something significant under here. It's 18 to 6. Yeah, I'd probably just have my imbalance right there. All right, so it'd be like, I'm pretty sure it was like up here to down here. All right, and it's also just highlighted. And there's your imbalance, and you just simply just wait for that to get tapped. All right, 19 was the first imbalance, so that's right here. And then the bottom was like right here, so that's your imbalance. You could put your stop like right here, and that's your entry. All right, so you can use imbalances for entries. I personally use those, and I just look to see, maybe I enter where a passive buyer was and I hope to see him again, or I enter where the most aggressive market participants came in. Yeah, it's I don't know if I can go any deeper into that. I mean, I feel like most of this is like easy for me, but I don't know. There's probably questions people would have. Exhaustion, something else I haven't covered. I mean, I don't know if you can really see it. You just want to see, I mean, it's easier to see on the CVD, which is why I'll make a video on it, but like here you can see, like, we had aggressive delta right here, and then we started to get exhausted. So if each of these were bars based on their size, here we would see -1, then we'd see 9, then we'd see 36, then we'd see 61. So you can see how we got a little exhausted right here. I mean, I'm trying to find examples, but it's really hard to just pick an example without having context, but you just want to see, first of all, you want to see the delta decrease. So it's the opposite of looking for an absorption. As we approach the level, you want to see the buyers, the delta, start to decrease. So we have 200, maybe we had 400 right here, and then you want to see it go down to 50, maybe go into the negatives before even hitting the level, -10, then see it go down right to maybe 20. You just want to see it trickle down. All right, and that's just how you see it with delta. Viewing it on the actual footprint itself, you just want to see market buyers or sellers just start to get weaker, right? Like, let's say we had like 100 to 20 as we're approaching a level, then we see like 50 to 40, then we see maybe like 30 to 10. It's just getting exhausted, right? And then maybe we see like 30 sellers and 5 buyers, right? So they're just getting exhausted as we get into that level. All right. I mean, I really wish I picked some examples of these, but those are the concepts that you'd look for and kind of how you view those. I don't have any examples really. I mean, on the DOM, I took these longs today. Yeah, this is today. Damn. I took longs right here on the DOM because absorption. I took them on ES actually, so it's right here. I entered like right here, and I wanted us to trend the whole day, and I was right. I was betting on us trending, and I also got in some QQQ calls. Made a good return on those. But yeah, those are all the concepts: absorption, trap traders, and that's kind of how you look for it on the footprint. And also entering off of imbalances in the market is really helpful. All right. If you're re-entering, if that's your style, imbalances are your go-to thing you want to look at. Imbalances, and just where aggressive buyers started to come in, and see if they want to come in there again, and that's your entry, right? Shit. I don't know. There's not much else I can talk about. CVD, that'll be pretty quick. Not gonna be too long, but yeah, I mean, if you have any questions, those are the concepts I use mainly. If you're still confused on something, just look up on YouTube like some more examples of these and stuff like that. I'm sure you're gonna find a video. That's like one of the main ways I learned, and then finding like a bunch of other stuff, but just YouTube. It's all over there. But yeah, that's footprint.